The US government is about to commit economic suicide. And when you hear what their new plan is for containing China, you literally will be asking the same question these American financial economists did. Is the Biden administration trying to destroy the dollar? There's a lot to unpack in this story, but first let's give you the important context behind what's about to go down. It all started 2 years ago when Russia began its latest military operation against Ukraine. The US and its European allies responded to Putin's invasion by seizing over $300 billion in Russian central bank assets. Now, the goal was simple. The US wanted to instigate panic in Russian markets and hopefully destroy the Russian economy. With no access to the SWIFT banking system, the US hoped that this would force fear into the Russian citizens, resulting in a panic. Bank runs would then ensue, and if everything worked out perfectly, maybe this could even lead to the removal of Vladimir Putin himself as Russia's president. On paper, the plan looked very plausible, and when Russia's currency tanked following the invasion, it looked like the US strategy would actually work. But then remarkably, the entire plan failed. To date, there have been over 16,000 sanctions levied against Russia, but remarkably, Russia has been able to avoid every single one of them by switching to a war-based economy, stockpiling gold, and using gold to trade commodities around the world. I actually made a full presentation of the exact gold strategy Russia used to avoid all 16,000 sanctions, which is a fascinating case study into how our new multipolar world is changing everything we know. Make sure you watch to the end of today's video, and I'll share with you that presentation and also explain how you too can benefit from adding gold in your own investment portfolio. But here is where things get very interesting. Instead of crippling Russian banks, it was actually American banks that began collapsing last spring when Silicon Valley, Signature, and Silvergate banks all went under. Many regional banks throughout the United States were facing a similar fate until the Federal Reserve stepped in and gave out emergency loans to stop the panic among concerned US citizens. But now Janet Yellen, along with the European Commission, wants to take the $300 billion it seized from Russia and hand it directly over to Ukraine. This, of course, would violate international law, but most importantly, it would send a clear message to the rest of the world. Western financial markets are no longer a safe place to store your money. In reality, this single move could completely undermine global confidence in both the US dollar and euro, as the safety of your assets would depend on your standing in both Washington and Brussels. Make no mistake, we are going to see everyone from businessmen, companies, and even countries who own a lot of US debt start to move away from holding the US dollar, as the geopolitical risks are simply too high. China used to be the largest holder of US debt, but in the past 2 years it has been dumping dollars as fast as possible and stockpiling gold instead. Actually, it's not just China's central bank doing this. In 2022 and 2023, central banks around the globe have been purchasing as much gold as possible, and this is a major reason why gold continues to hit record highs nearly every month and shows no signs of slowing down. But just wait. I still haven't even told you Biden's latest brilliant idea to attack China with a currency war. And trust me, it's honestly one of the craziest ideas I've ever heard. Now, some may argue that standing in good favor with the US and EU should be relatively easy to do. It's only countries like North Korea, Iran, and Russia who have problems with the US. Well, not exactly. A few months ago, African Business shared this article, which shows the US is now threatening sanctions on Uganda over new anti-gay law. So it goes beyond just countries engaging in war and opposing the US position. Now, if you are a country that doesn't believe in the same ideologies of the US government, you could wake up to see your access to the US dollar gone overnight. And it doesn't stop there. Want to see how crazy this could go? The 2024 presidential frontrunner, Donald Trump, now has plans to sanction countries for refusing to use the US dollar. Trump went on to state in a recent CNBC interview, "I hate when countries go off the dollar. I would not allow countries to go off the dollar because when we lose that standard, that will be like losing a revolutionary war." But regardless of what the former or current president says, the world is shifting. A few months ago, Indonesia's president gave a speech saying his country needed to diversify its dollar holdings and dollar-denominated assets, saying, "Look at what happened to Russia." This is why Indonesia, which by the way is the fourth most populated country in the world, recently launched a de-dollarization task force last year to help promote the use of its local currency in bilateral transactions and diversify its risk from the greenback. It's not hard to understand why many global south countries across Latin America, Africa, and Asia are all moving away from the United States and closer to China. In reality, we should probably rename the Global South to the Global Majority because 88% of the world's population lives outside the West. And it's no secret that the many countries in this global majority want to see less sanctions and less use of the US dollar. But once again, this is where things get very interesting. And as promised, I'll share with you the latest threats from the US government against China and how it relates to the future of global currencies. Last week, Business Insider revealed the US is weighing using the power of the dollar to stop Chinese banks aiding Russia. But here is the main conclusion. Its plan could backfire. So what's really happening here? US politicians are probably looking at this chart from 2020, which shows the total trade value between Russia and China valued at $107 billion. And now they see the 2023 data showing the total trade value between these two strategic partners is now valued at $240 billion, a 124% increase in just 3 years. The US government is not happy that China is increasing its trade with Russia, but in reality, over 85% of the world is not sanctioning Russia. In fact, one of America's biggest allies, India, has been one of the biggest importers of Russian crude oil since the recent conflicts in Ukraine began. Of course, this simple fact doesn't matter to US politicians. Last week, the Wall Street Journal reported the US is drafting sanctions that threaten to cut some Chinese banks off the global financial system. And I have to be honest, this is where the leadership of the US government has completely lost the plot. Remember the saying, don't play with fire unless you want to get burned? Well, this is exactly the path the US government now wants to take us down. First of all, did we learn anything from the failed attempt to contain Russia with over 16,000 sanctions? Obviously not. Sanctions have only made Russia's military stronger, and despite whatever emergency aid package Congress passes to send more funds to Ukraine, there is no chance that this conflict ends in anything but a Russian victory. And this is not my opinion, nor am I repeating Russian talking points. This is what nearly every seasoned war expert from the US is now stating at this point. But now it's time to get very real, because sanctioning Russia is one thing, but if the US actually sanctions Chinese banks and cuts them off from the international monetary system, you literally couldn't find a better way to incentivize the world to move away from the US dollar faster. And let me explain it to you with one simple chart. You see, in 2000, the United States had tremendous leverage over the entire globe because it was the #1 trading partner with every continent and major country in the world. But fast forward 2 decades, and only a handful of countries count on the US as their top trading partner. The vast majority of the world is covered in red, showing clear as day that China now has the position of leverage. And with this leverage, China can make one simple move and accelerate de-dollarization across the globe. Over 120 countries around the world now count China as their top trading partner. Of course, China's government knows this and simply needs to announce that moving forward, in order to buy Chinese goods, you need to buy them exclusively in China's currency. Before long, most of the world would de-dollarize, because the majority of countries depend on China as their top trading partner. This is why the idea of sanctioning Chinese banks is absolutely crazy and will only result in a complete backfire against the US government and the US dollar. In reality, the de-dollarization trend is a decades-old event that first began around the turn of the century. In 1999, we still lived in a unipolar world where the United States was the one and true superpower in the globe. In 1999, 73% of all global currency reserves were held in US dollars. But over the next 2 decades, China started to rise. Don't forget the earlier graph I showed you, documenting the shift in just 20 years from the United States to China and how China now dominates the world supply. When China became the world's top trading partner, this was the start of the new multipolar world, where countries now had a choice between working with the United States, working with China, or working with both. By 2021, only 55% of global currency reserves were held in US dollars. But with the seizure of Russian financial assets in 2022, this pushed the world's effort to de-dollarize to an entire new level. At the end of 2023, less than 47% of the world's currency reserves are now held in the US dollar. The best quote to sum up the actions of the US government and our politicians is from economist Peter St. Onge. If the people running our country were intentionally trying to destroy the dollar, it's not clear what they would be doing differently. But everyone, this is why we study geopolitics and see what's happening around the world, because there is always something to learn and even help you find gaps in the investing market. The primary reason Russia was able to avoid all 16,000 sanctions is they stockpiled gold, and also they pegged their currency to gold as well. And the reason is simple. It's the one asset that always provides stability in fearful times, and it's also a great investing strategy that you can employ as well. In my opinion, precious metals should absolutely be part of a balanced investing portfolio. I myself have been an active investor in gold for many years, and I have partnered with Lear Capital to be my precious metals expert and the sponsor of today's show. And the reason is simple. Lear has been helping investors like me purchase gold and silver for almost 30 years. They have over 3 billion in trusted transactions, thousands of 5-star reviews, and are the only gold company with a 24-hour risk-free purchase guarantee. But this is not a hard pitch from me. I'm not trying to sell you anything in today's video. Many of you know that I'm an active investor and I simply share opportunities I see in today's ever-changing world. And honestly, the best thing about Lear is the quality education you can receive about investing in gold. Simply call Lear Capital for your free gold and silver investor kit. They'll send you a must-read report that explains how the price of gold rises right along with our rising US debt and makes a great case for gold reaching $3,200 an ounce. With US debt hitting $34 trillion in printing, precious metals can be the difference maker for your savings and retirement. Call today and mention my name, Cyrus, and Lear Capital is going to gift you $250 in credit simply for just contacting them. Simply call 800-489-6450. That's 800-489-6450 or go to learcyrus.com. Everyone, thank you for making it to this point in the video. And as promised, click here to watch the full presentation on how Russia used gold to successfully avoid all 16,000 sanctions the US government imposed on them. Once again, a special thanks to Lear Capital for sponsoring today's important episode. Make sure that you give them a call or visit the website to get a free access to their $3,200 gold report. As always, I want to thank you all for your incredible support, and I look forward to seeing you all in our next video soon.